Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, lots of stocks making move right now. Intraday charts for some of them should come up. Balrampur Chini has moved to high point of the day. That's up 4.5%. Havels is the other one where you're seeing a bit of a move right now. Havels, in fact, has corrected from its highs recently, and today it's seeing a bit of a move. The big index stock which is now moving is HDFC Limited. In fact, both HDFC and HDFC Bank, but specifically HDFC Limited, that's where you're seeing a bit of a move. Look at that move on HDFC. That's actually a big move now, up about almost 1%. That's helping the index, the Nifty, that is 11,556. BTST time, Ashwani and Mitesh with us for that. Ashwani, you go first. This move on the market today and from yesterday's low, what does that signal? And of course, your individual stock calls.
See, this move is much more impressive than the one that happened yesterday, where, just a few stocks led the market higher. Today, Reliance is up 3%. I mean, the best mover is not from banks. And if you see, Pharma is higher, HDFC Bank is higher, and hardly three sectors are down. The mid-cap Nifty Junior is up 225 points. So this looks like a much stronger rally than the one that happened yesterday. And Reliance maybe has bottomed out and is planning to lead whatever upside happens, because 3% on Reliance, and if Reliance takes control, you can do what you like, but you won't be able to take this market much lower. So maybe today I am willing to even carry positions for tomorrow, because this is a strong market going into the close. It had its dips. Both time dips got bought. If Rupee tomorrow gets up to 71.60 thereabouts, there could be a further move on the market given the strength of the stocks which are going up. So that way, that chance now I am willing to take. Individually, Reliance, as I said, that's a buy with a stop of 1280, target with a stop of 1240, target of 1280. Canara Bank is a buy with a stop of 265, target of 282. And BOB is a buy with a stop of 142, target of 154, with the caveat that none of those macros misbehave.
Okay, all right, take that point on board. By the way, you just saw some news flashing on Vakarangi, and this is a trader's stock really, and it is reacting for what it's worth. And therefore, I'm just pointing it out. So what they're going to do is Aditya Birla Finance, I think, is going to be selling something.
Let's not,
let's just move on.
Let's just move on.
Okay. All right, Mitesh, your calls for the last half hour.
So I've been liking Tata Motors for quite some time, and that's a BTSC right now. Though I still wanted to, close above this 271, 270 zone, but I think the structure is nearly ready. That's a BTSC with a stop at 266. Look for 278 as the first target, and CESC is a conditional buy. Let it cross 1025, 26, and take a short-term one today kind of a call with a stop at 1018 for targets of 1045, 50 on the upside.
Okay. By the way, look at the stock that's moving once again now. Axis Bank. It's made a bit of a habit of this 3 p.m. move on Axis. Just see the way it's moving now. From the lows, there's a bit of a move that's happening now on Axis. 639.20 is what you have. Of course, we still don't know about the new CEO. A lot of market buzz, whether it's coming today or tomorrow. That is always the case with Axis Bank. Till the time you have some surety, you don't want to speculate too much on that. But Ashwani, thoughts on the charts of Axis Bank? Intraday, quite a bit of move happening right now.
See, the good news is what last 3 or 4 days have done, it's corrected the corporate banks. And Axis Bank around 620 is a fairly decent buy. And if you accumulate once the rally restarts, I think this could be one of the outperformers in terms of the Bank Nifty.
Axis Bank, that's a stock for you. By the way, there's a lot of intraday buying on Zee Entertainment. Maybe it's, I don't know if it's shorts covering or something else, but it's a big pullback from what was a 6% cut in the morning. Over 6% the stock was down. And from those levels, it's really trying to pull back. Mitesh, any thoughts on Zee Entertainment? I mean, not that it's been a great mover. It's just really kind of pulled itself in the ground over the last few months.
So I think, even after this recovery, and which is impressive given the fact that it's kind of recovered from 436 to about 470, which is 35 points, roughly about 8% intraday. For the week, the stock is still down 6%. So I think it looks like more of a short covering from oversold levels. Maybe it'll head towards 475, 478 to about 480 on the upside, but it'll be difficult for the stock to get past those levels.
Okay, well, we've been talking about only stocks making highs. Let's talk about some stocks making lows as well. It's not that the market doesn't have them. There's, of course, Shriram Transport that Rupee alluded to. There's Colgate, which is very close to the low point of the day. So that's an interesting stock. Infosys, and today that the trade has reversed a bit. On expected lines, perhaps Infosys is now making lows of the day, while the banks are making highs of the day. So that's also interesting. And while the bank Nifty has done well, Yes Bank is interesting. Just pull out the intraday chart on Yes Bank, because I don't know what's happening here, and really this is in no man's land. For last few days, all kind of rumors and speculation whether Rana Kapoor is getting extension or not. For now, it's down about 1.3% is what you have as far as Yes Bank is concerned. Neeraj Diwan is still with us. Neeraj, your thoughts on Yes Bank from 400 down to 340? Good opportunity, you reckon, or could this be some serious dent, from here on?
Yeah, actually, I think that Yes Bank, the kind of fall we've seen because of Rana Kapoor's extension not coming through as of now, I think this is an opportunity, because even though Rana Kapoor, we don't know till now whether he's going to get the extension or not. Even if he doesn't get the extension, he's still going to be part of the bank as such, and still going to be a guiding force for the bank. And it's a professionally run organization where I think they can be just a short-term aberration, but over longer term, I think this is an opportunity. And with the kind of movement that we've seen in the corporate-facing banks also now, the likes of Axis Bank also doing well, I think Yes Bank should be bought at the current levels if someone has a long-term view.
Okay, there are lots of stocks on the move. Let's pull up Godfrey Phillips. What just happened here? It really got lit up, didn't it? 7.5% up on Godfrey Phillips. It's a vertical move up on this particular stock. Let's get the intraday up. That's what we're talking about. Lots of buying on pharma names. Anuj was talking about Aurobindo and its big acquisition, but let's not forget Biocon, Torrent Pharma. A lot of these other stocks are also up and about. Before we let you go, Neeraj, what's your top pharma bet now? Because the market's real bent of mind and the theme, the flavor is IT and pharma. So what would your top picks be?
Yeah, definitely pharma is making a comeback, and we've seen a decent rally from the bottom. But I think things should still be in the early stages where one can still see pharma stocks doing well in the next couple of quarters. So I would rather go with stocks like Cadila, where I think a lot of filings are still to be done in the next 1.5 years. So Cadila would be my top pick, followed by something like a Sun Pharma, where I think a lot of resolution seems to be getting over now, and the stock can be in the positive territory for the next couple of quarters. So my topics would be Cadila and then Sun Pharma.
Okay, Neeraj, we'll let you go on that note. Thanks a lot for joining us. Today, Amisha Vora, Joint Managing Director of Prabhudas Leeladhar, is with us now. Amisha, hi, good afternoon. I wanted your thoughts first on Reliance. That's making a bit of a move. You reckon it's ready to take back that leadership position once again?
It looks like yes. I think Reliance has taken a fantastic leap, and if I remember right, it's almost a 38 to 40% kind of a run which has happened in this first 6 months. But at the same time, the underweight on the stock continues to be very high across domestic and FIIs, as also some of the corporate action news also could be fueling the rally. So I think that yes, but the momentum and direction will remain positive.
Okay, so on that note, Amisha, the question that I was just asking our previous guest, the market's mood and flavor really is on IT and pharma. On pharma, what kind of stocks are you recommending at the moment?
So we have been bullish on Aurobindo for a very long time. Of course, the stock had given a little pain in last 6 months when it corrected in last 6-8 months. But now once again, it's doing well. I think today's acquisition news is a very positive and EPS accretive news, and it's they've been able to buy it at a good valuation. So I think this momentum should continue. So Aurobindo is one of the pharma pick that we have. I'm sure market is very upbeat on pharma. A, because of huge underperformance. B, because of rupee. And C, a lot of resolutions are happening. But my analyst is of the view that despite resolutions which are happening either at plant level or some product launches, the market continues to remain in US very, very competitive, and he feels 1 or 2 quarter results will still not be good, and one needs to wait and watch. So apart from Aurobindo, we don't have any major long list of buys in pharma at the moment.
Well, things can turn around really quickly. That's the kind of market we are in. Pull up State Bank of India, pull up Yes Bank, pull up Axis Bank, pull up the Nifty Bank, actually. Anuj, so it's still dance and drama on the street?
You know, this frankly speaking, this weekly options expiry is the most abused product. Let me put it that way. Because, just 2 or 3 names. I mean, I refuse to believe that this is just normal trading going on here. You have the Nifty Bank going all the way up to 27,550 moments after 3 p.m. Because, what happens, Rupee, is that you take a volume-weighted average price between 3 p.m. and 3:30, and then you arrive at the expiry number. So what you will see is the closing rate would be completely different and the adjusted rate would be completely different. So that way, I don't know, it's an index where 2 stocks account for 50%, 3 stocks account for 60-62%. Indices like that lopsided obviously will have these kind of moves, especially on expiry day. But I mean, frankly speaking, it's just all over the place really for me.
Well, that's the market for you. By the way, some news points flashing on the screen. These are exclusive details we're picking up from sources on Reliance Home Finance. So let's straight away take it to Nimesh, who has all the details. Nimesh, so the company is looking at some equity investment?
Yes, sir. So, the street actually missed out an official announcement 2 days back from the company itself saying that they are in talks with a few potential players and they're looking at preferential allotment and all. Now, what I understand from sources is that they are in actually exclusive talks with one of the large PE players or large investors, which is Abu Dhabi Investment Trust, and might be that Abu Dhabi Investment Trust, which is called ADIA, they may buy up to 24.9% stake via preferential allotment in Reliance Home Finance. Remember, if they buy less than 25%, it will not trigger an open offer, but the stake will be like 25%, 25%, close to 25% will be a significant stake which ADIA is looking to buy into Reliance Home Finance, and will be at a significant premium is what I'm told. So that's something to watch out for. I'm told they are in exclusive talks. This might take a month or so to close, but as things stand, what I understand, they're looking at the company is looking to raise between 1,500 to 2,000 crore. It's a big range, but even at 1,500 crore, it would mean a significant premium currently, because the current market cap of Reliance Home Finance is close to 3,200 crores. Also, if you look at the shareholding pattern, remember, this is a company which got spin off from Reliance Capital. Every investor got 1 share for 1 shareholder in Reliance Capital. Now the promoters own 75%. If you do a basic math, if there is a 25% preferential allotment, most likely the promoter holding will fall close to 65%. So promoter will own 65, and 24% will be owned by ADIA if this preferential allotment goes through.
Okay, Nimesh, thanks a lot for that. Big move happening on Reliance Home Finance, of course, up 7% right now. Actually, ADAG stocks have done well over the last 3 or 4 days. You've seen the move in Reliance Infra, Reliance Capital. So some of these stocks have looked good, of course. Let's get back to our guest then. Amisha, anything in the ADAG pack that you like? Nimesh just, of course, was talking about Reliance Home Finance and the preferential allotment.
I think the preferential allotment and the required capital, if it goes through, and it will go through, I'm sure, will be the better of the lot is what I feel at the moment, Reliance Home Finance, because home finance business has huge potential and capital can be leveraged 10 times, as you know, and the NPA levels are much lower. So that's a very good business with long-term potential, and when injected with capital, it has potential to grow substantially. So that is the better of the lot, I would say.
Okay, well, that's Reliance Home Finance, which is on the move. On that note, we're 10 minutes away from market closing. Let's bring you some more market opinion. Earlier in the day, we caught up with Mahesh Patil, Co-Chief Investment Officer at Aditya Birla Sun Life Mutual Fund. Let's listen in to his take on the market at the moment.
Yeah, there could be some correction over there depending how the global cues pan out. And I think we've seen a decent rally in the Nifty in the last 6 months or so. So I think there could be mild correction, which I think one should be prepared for. But I don't see a large correction because the fundamentals are improving.
Now we have to come to terms with a yield curve where the 10-year is at probably 8.1. Some people are calling for 8.25. That will have a seminal effect on some stocks. What would you avoid and what may you buy?
I think in the context of rising interest rates, I would say there will be some pressure on companies with high leverage, some of the infra names. Financials could see some impact, but again, there will be differentiation over there. The banks, which have got good liability franchise, high CASA banks, while we've seen interest rates go up, I mean, you've seen the increase in the MCLR rate. So that should benefit some of these banks over a period of time. But yeah, clearly overall financials, NBFC could see mild sentiment weakness. Yes, could be a slight weakness over there.
I wanted your thoughts on autos. That's that's an index which hasn't done well. Some of the large stocks like Maruti, for example, have not done as well as a lot of people thought it would. A couple of two-wheelers also. Your thoughts on this space and any particular sub-theme that you like here?
So autos, yeah, I think if you look at the two-wheeler space, while volume growth has been fairly good, on the back of pickup in the rural demand, especially for motorcycles. But I think the pressure on the margins because of high competitive intensity is a concern which has affected the sector. On the cars and this thing, I think things are fairly okay. I think the overall volume growth should be fairly good. We don't see any major impact in terms of margins over there. So I think that should do well. Commercial vehicles, on the other hand, have surprised positively. So overall, that sector should report around 10 to 15% kind of a growth this year. And even next year should be good because of the new emission norms which are coming in.
Okay. By the way, the space that's really taking a knock now is the consumption basket yet again. So this is third or fourth day running actually that we're seeing a fall. Godrej Consumers is now down 2.5%. It's lost 10% of its value this week. Page Industries has lost 7% of its value this week, and a couple of others as well are under pressure. Mahesh, your thoughts here? See, the demand is still positive. I mean, nothing has changed. The Q1 numbers were really good, but now people are waking up to expensive valuations. You think you should use this as a buying opportunity?
Yeah, I think overall the structural story over there remains fairly intact, and these are good quality companies. And I think post the recent correction or probably slightly more correction from here, again they will start to look attractive and see good support over there.
Would you advise people now to move a little bit or allocate a little more to fixed income funds? Or do you think even over there further losses are possible?
I think it's advisable to have a right balance, right? So in the portfolio, so some allocation towards that over a longer term period, I think would be advisable. But I think again on the lower duration over there, because if interest rates go up, I think there will be some losses over there. So in the shorter term, I think there could be some reason to move some allocation, because over a period of time we've seen that while equities have done well, the allocation of equities in the portfolio would have gone down. So to amount at that, I think some amount of rebalancing in the portfolio, I think would be advisable.
I wanted your thoughts on some of these defense companies. As the pricing policy has changed, the government is now cutting down on profit margins for many of these orders. Do you think that it's going to lead to significant margin erosion here?
So there is immense value in some of these PSUs, but because of various reasons like some policy changes or fears about supply of more paper coming in the PSU space, I think there is enough opportunity value over there currently. And somebody with a slightly longer term, I think until elections probably might not see some kind of a re-rating over there, because the supply overhang would be there. But yeah, somebody with a longer term view, I think where the business dynamics are still pretty much intact, some of these companies really offer good value at this.
Just have about 5 minutes to go before trade closes out for the day, and well, the bulls have kind of fought back, but Anuj, I don't know if it's any good or how we should read this because of this expiry factor. The Nifty bank is now almost flattening out all over again. So, I mean, a little confusing today's picture. How would you take it?
27,425, 27,300 put and 27,500 call is where the highest open interest was. So expiry was supposed to be somewhere in between that mark, Rupee. And of course, on expiry day, these moves can be rather large in both directions. I think the one point which stands out is that dollar rupee is really something the market is very sensitive to, because when at 230 that move started to happen, you also started to see strength in dollar rupee in rupee. Now once again, just look at that. You can superimpose the two charts. The dollar rupee moving in this direction and the Nifty bank moving in this on the inverse direction. So we have become very sensitive to what's happening on the dollar rupee and of course on crude as well. So till then, we are perhaps hostage to that. The range has been defined now. I think the all-time high and yesterday's low on the Nifty. That's the range now. Let's see, which side we break out or break down. That would decide the next direction of the market move.
Okay, well, we've just got a couple of minutes left. The good thing for the bulls is that Reliance is still leading this from the front. Still a 3% gain on that stock. And some of the others like Sun Pharma, Cipla, Lupin. Pharma has been largely a good space to be in today. Ashwani, what's your verdict then? I mean, how do we read this? Glass half full, half empty?
See, the issue here is that, the macros which are against us do not give even a breather to the market. So now crude has begun to move again. That's up about 40 cents. What happens if tomorrow you come back to a $79 crude? So everything goes out of the window. I mean, you will take going home basically at 71.97 on dollar rupee. So what does it take to make a fresh low? So, the problem is low confidence. The moment the market tries to engineer a rally, crude goes up or rupee goes down. In this kind of scenario, it will be difficult. I mean, just a little bit of breakdown. Once the consolidation ends, you will be lower. If crude breaks 80, rupee goes beyond 72 and sustains, no amount of domestic buying or support levels or Reliance will be able to hold this market.
Okay, let's just quickly do a recap of the trade. It was very volatile, of course. You would have seen that play out, more specifically for Nifty Bank, where we are closing right at 27,400. And that is where, there were indications with the options data that you would close right at 27,400, and that's what we are doing. Reliance was the top gainer, 2.7% higher on that. Sun Pharma, Coal India, Lupin, they made a bit of a move. HDFC was higher by about 1%. HCL Tech did make a bit of a move. IndusInd Bank, after a long time, made a move. On the way down, Zee Entertainment would go down as the top loser, but trust me, things were very different in the morning. It was down 10% almost in the morning. So from that point, it actually recovered about 8%. Maruti has been a weak stock for some time now, down about 1.6%. And Bajaj Finance from 3,000 to 2675. This 10.6% correction has happened in a period of 5 days. So obviously, there's a big sell-off happening here, and from the high point, that is on Bajaj Finance. Yes Bank was the other notable seller in trade today.
Okay, on the stocks beyond the Nifty 50, well, the mid-cap index is up just about 54 points, again off the kind of highs that it was sitting on earlier. Aurobindo Pharma has been your stock of the day in terms of just the reaction to news. Their acquisition has been well taken by the market, 9% up on that stock. Paper stocks continue to be on a tear, whether it's JK Paper, West Coast, International Paper, doesn't matter what you're looking at, Star Paper. I mean, 5, 6, 7, in some cases 15%. That's the kind of move these stocks are in the midst of. Reliance Home Finance, on the news break that Nimesh just gave us, they're looking at raising almost 2,000 crores via equity. That stock's up about 6.5%, 7%. Biocon has had a very good day today, as has Granules. So pharma is definitely a theme in this market. Cadila Health, Biocon, Granules, these are some of the stocks that have done well. Even Wockhardt, actually, I saw about 2.5% up on that stock as well. Then we've got the likes of Future Retail that have found some takers today. Rights is up about 5%. PFC has managed about a 3% up move. Muthoot Finance, by the way, continues to build on its gains from yesterday. Another 3% up. Now, these are the major gainers, but if you look at the loser side of the screen, then again, there are some disappointments here. Shriram Transport Finance will definitely stand out. 5.5% gone from that stock again. Its loss so far in the week is 11%. It's a big fall on a big stock. Nalco, despite the management's positive commentary on alumina prices, stock tanked about 7% today. Sun TV has lost 3.5%. BEL continues to be smashed. Lots of brokerage downgrades coming in. We've seen some weakness on Manappuram Finance, a Crompton Consumer, Godrej Consumer. So these are some of the stocks on the way down. Dish TV, M&M Financial, Edelweiss. So NBFC Universe, a little lackluster today, one would have to say. So that's how it's played out. I'll just recap with Adani Enterprises as the last stock, because finally what you're seeing on the screen is a stock price without the gas business. The demerger is in effect from today, and therefore you're seeing that 22% drop. Well, that's the way it's played out. I guess mixed trends even in mid-caps, Anuj.
Oh, yes, mixed trend, obviously. So all over the place. Let's take some final thoughts then. By the way, the point I was making on the Nifty banks last 30 minutes weighted average price. So the last traded rate was 27,420. What you're seeing on the screen right now is 27,468. And now that's not because, towards the end there's 50-point buying which would have happened. It's because it's the adjustment and the adjusted price. So accordingly, if you were having a 27,500 call, that's zero. If you were having a 27,400 put, it's zero. And of course, it's right in between. Mitesh, your thoughts on the trade then, and how would you approach trade tomorrow then?
Yeah, Anuj, as I said, I think, we've made a low, we bounced back, and I said 11,560, 580 would be a tough level for the markets to get past. We've had a high at about 11,562. I think the next few days will be extremely choppy, and you might just, without any proper sense of direction, might, just chop around in this 11,560, 580 on the upside to about 11,400 levels on the downside. And I think after 3, 4, 5 days of consolidation and of this choppiness and this volatile movement, then we might actually see some kind of trend evolving. In case we start breaking 11,400, then I'm afraid the trend will be on the downside. But for the timing, I think we'll just prepare ourselves for a very choppy.
India is a long-term destination for foreign investors. Rupee volatility and crude shocks are mere blips on the radar, and these will not drive away capital. That's the kind of optimism that we heard from investment giant Fairfax's founder and CEO Prem Watsa. Here's a slice of the exclusive conversation that our colleague Nitya Balakrishnan had with Watsa.
The main reason, I think, is as you saw here with Invest India presentation by Deepak Bagla, that India is becoming business friendly in a huge way with this new government, with Mr. Modi, and the rankings have gone from 142 to 100. Transformational, unprecedented, never happened before, that type of movement. And so I think business ultimately provides employment. So you get freedom. We've had in India, I left India at the age of 22, 46 years ago. And so India didn't have economic freedom for the individual. Now India's opening up so that we have economic freedom. You can do whatever you want. I can do whatever I want. I can buy land. I can buy this. I don't have a lot of bureaucracy restricting me. Start a business like in a day, right? So that's what's happened. That's the transformation that's taken place in India. And it's taken place under this government, and it's the corruption's been eliminated right at the top. And I give it a credit to Mr. Modi. I just think Mr. Modi's done a fantastic job.
Mr. Watsa, if I would ask you a couple of sectors that you believe in India which will grow better than the others, what would they be?
No, we don't go by sectors. Sure. We go by good people, honest people with a track record who want to build company, who want to serve their customers. So you serve your customers, look after the people who look after the customers, make a return for your shareholders, and then put money back into the system.
What's the kind of investment that you at Fairfax have currently in India, and what is the outlook on that?
All very good, but we own the Bangalore International Airport. We have a big 35% interest in IIFL. We have NCML, which is a grain storage company that we're bringing into, and on and on and on. Very, very happy with all of the investments, and they all have huge
quantum and headcount that you have.
Yeah, so we've invested about 5 billion, and we employ, particularly through Quest, which is a services company, 300,000 people.
And that's set to grow?
Set to grow significantly. Especially after this conference. I'm so inspired.
One final question before I let you go. It's tough economic conditions, market conditions, given currency volatility as well as crude surging. Given that, do you think long-term investment in India could be impacted in the near term, or do you think this is just a blip in the radar?
This is just a blip.
Yeah?
Just a blip. They won't even notice. You won't even talk about it in a few years.
Global investors are not too concerned?
No, I think global investors should look right through that. This is like an unprecedented opportunity facing the Indian people and facing investors in India.
Perspectives vary so much depending on your time frames and your actual objective of the investment. That is Prem Vatsa of Fairfax. Let's move on now. Sources are telling CNBC TV18 that pilots of Jet Airways have written to the management regarding a delay in their salaries. Utkarsh Chaturvedi joins in with the latest. Utkarsh, rarely any good news on Jet Airways these days. Now, what's happening with the salaries?
What we are picking up from our sources is that the pilots have written to the management regarding the delay of salaries. Now, they were earlier being told that the salaries will be credited for last month by only the mid of this month. Now, what they have written in their letter is, and I'm reading out the excerpts of this, they have said that the delay in salary is absolutely unacceptable to the committee. No communication, what they say is that there has been no communication about the delay in salary to them till this point of time. In fact, they have said that the pilots are being forced to bear the brunt of the financial mismanagement by the company. A very important line here is that they've said in their letter is that management will bear sole responsibility for any repercussions, and not paying the salary on time would lead to non-cooperation by pilots. Now, when the pilots have shot off this letter, Jet Airways has gotten back to the pilots and have assured that in a week's time the salaries will be processed. In fact, they have also told the pilots that the management is in the process of raising funds and there will be more money coming in by the sale of jet privilege. This is what the management has told the pilots. Also, all the other issues which is regarding the expat pilots and the other changes which the pilot committee had written about in an earlier email to the management has also been looked at in an email query to Jet Airways. Jet Airways has told us that the company is in dialogue with the pilots and other members of its team to resolve some issues, including disbursement of salaries.
Okay, all right. Thanks, Utkarsh, for getting us that story. That's Jet Airways still making headlines for various reasons, and most of them concerning with the financial health of that carrier. Let's move on. Bharti Group may be looking to exit future retail. CNBC TV18 learns from sources that Bharti subsidiary Cedar Support Services has begun talks with a clutch of private equity investors to exit and get out of its stake in future retail. We have Priya Sheth joining in with all the details. How much stake are we talking about, Priya? Are they trying to sell all of it, part of it?
Well, so Rupee, just to take you through this, after selling about 6% of their stake to Premji Invest in June 2018, we learned that Cedar Support Services, which is a subsidiary of the Bharti Group, is looking at exiting its 3.19% stake as far as future retail is concerned. So what we do understand at this point in time is that Bharti Group is in talks with several private equity investors, and these include both foreign as well as domestic players for this stake sale. But in fact, do remember that at this point in time, the deal is valued at about 850 to 900 crore rupees is what we do understand from sources. This is the current market rate. But of course, we do learn that this deal could go through at a tad higher price. Of course, as far as future retail is concerned, there is a clawback provision, which means that future retail could receive as much as about 400 to 450 crore rupees as a part of this agreement between the two companies. But of course, the timing of the deal is what's most important. We do understand that this could take place over the next 4 to 8 weeks. But of course, a large part of it depends on when a future group signs a strategic deal with a foreign investor. Now, do remember that there are several global tech giants, including the likes of Amazon, who have expressed interest to buy about 10% stake in future retail. So, if this deal goes through, then this transaction will happen immediately, is what we do understand. Of course, at this point in time, they're only sounding out investors for a possible indication as to when and who would be possibly interested to buy the remaining 3.19% stake. In fact, we did reach out to both the companies. Bharti responded to us saying that we do not comment as far as market speculation is concerned. Future Group said that they cannot comment on a deal where the company is neither a buyer or seller.
Okay, all right. Thanks, Priya, for all of those details. Some news now from the auto sector. Escorts has launched its first autonomous tractor concept. In an exclusive conversation, Nikhil Nanda, CMD of Escorts Group, talks about the new technology and how it can be used for transforming the future of farming.
The idea was more about smart farming. You know, it's about really creating productivity and smartness in terms of all the information that is digitally available that we can equip and empower our farming community with. With the kind of knowledge that we have, I think, you know, in terms of knowing the moisture, knowing the kind of cultivation that you can do, the entire process of connecting the equipment, correcting the ecosystem and bringing the knowledge in a manner that we call quote-unquote autonomous farms. Having a tractor drive itself without the ecosystem being created, in my personal view, has is unproductive. Right. So in today's launch at Exclusive, we are very proud to, one, bring in partners. because Escorts is a company that has always believed in partnership, and we're not saying we're going to do it on our own. We possibly cannot do it on our own. That's the reason we have partners like Bosch, we have partners like Trimble, we have partners like Motherson Sumi, Reliance Jio, and all of us are bringing in and creating that ecosystem.
So in what capacity will these partners be on board? For example, Reliance Jio, Trimble, Motherson Sumi, Bosch. I mean, what is the kind of technology that you're expecting to come in as part of these?
So all these partners will create as what we call autonomous farms. So you'll have an autonomous tractor that's going to speak to the implement, it's going to speak to the ecosystem, will understand and digitally give all the information to the farmer about the entire health and entire acreage of the farming that he wants to do. So the knowledge of precision and knowledge of where exactly does he need to sow that seed, in which part of that land, which has a maximum irritability of maximum throughput or productivity, in a manner that is done in a precision manner through analytical capability that even a human being cannot do. So our endeavor is to create an experience and create an ecosystem that can demonstrate productivity at a level that we have not seen in India.
Space, because remember that market is still working, and we have seen last many days that the rupee decline actually comes in the last 1 hour of the trade. It did come during the opening trade itself today, where we did see the rupee go or breach 72 to a dollar as well. Of course, there have been reports of RBI intervention since then, and that seems to have taken the rupee off its lows. But the reports do suggest that the net shorts on the currency are at a 5-year highs. That, of course, has to do with what's happening in the domestic markets. But much of it really is the global cues, where we have seen the contagion fears, really, the recession that has been hit at Turkey, at Argentina, South Africa, and the kind of exposure or the cross exposure that many of the other countries would have with those countries is something that really seems to be bothering. And we have seen the Indian rupee take a hit because of that as well. 71.91, we still are down by nearly 3% in last 7 trading sessions, down 13% now for this year is how we are trading versus the US dollar. Adam Cole is Director and Global Head of Forex Strategy at Royal Bank of Canada. He joins us on the line to speak more about this. Adam, hi, thank you so much for joining us. First of all, how have you seen the global markets react? Because we have seen almost every other emerging market Asian currency trading on the negative for 2018, and how strong, how serious are the contagion fears according to you?
And if you look at the relative performance of emerging markets, the currencies which have been under most intense pressure are those with the largest external funding requirements, i.e. the big current account deficits. It's a theme which is not just in 2018, but something we've seen running through markets for much longer than that. And I think it's a theme we'll continue to see as we move towards policy normalization in the rest of the world, albeit very gradually, that markets will continue to focus on the currencies that require large external capital inflows versus those that see net capital outflows. And that keeps those emerging markets under relatively intense pressure. So I think for most notably for Argentina and Turkey, but for a number of other emerging markets with smaller deficits, that's a theme we'll just keep coming back to repeatedly.
Adam, would you say that much of the pain has been factored in? Have we seen much of those lows come in, or are you anticipating further declines for many of these currencies?
A lot will depend on the policy response within those countries, which is still not entirely clear. We've seen the first steps in Argentina. We await the central bank meeting in Turkey, where we are being led to believe that rates will rise at next week's meeting. And it's conceivable we've seen worse if the policy response domestically is seen to be strong enough. But that's by no means a foregone conclusion, and we certainly wouldn't rule out another test to the lows or below for Turkey and Argentina in particular, where markets are carrying a sort of healthy degree of skepticism on how decisively the authorities will act.
Adam, I don't know how much do you follow the Indian rupee, but we have seen quite a bit of a decline. It has been hitting record lows every day for last 7 sessions now. What is your sense on what the policy perhaps needs to be, and how much of an impact can we further take from the global markets?
I think I would say mostly being pulled along by the broad trend in emerging markets. As you note, emerging markets are under pressure as a group, and particularly so the emerging markets that run external deficits, which India does, albeit a lot smaller than the deficits in the countries that are really under most intense scrutiny. It does fall into that basket of emerging market currencies that need external capital. And as such, it's under pressure because, as a group, those currencies are under pressure. I don't think it's at the forefront of markets' attention in the way that some of the more obvious examples are. But until we are comfortably out of the woods in terms of funding requirements in the Turkish lira and Argentinian peso, then I think there is an ongoing risk of contagion.
Adam, also comment on the US dollar itself, because that clearly has been the choice for a safe haven all of last year and this year as well. Is that the pattern that you see continuing going forward?
For us, it is, and I think that's rather off consensus. The consensus view for 2018, when we started the year, was that the dollar would generally fall against most of the major currencies. Clearly, it hasn't. It's broadly risen. But despite that, the consensus view now is still that the dollar will generally fall in the remainder of this year and into next year. And we don't agree with that. We think that we're not rampant dollar bulls, but generally we have a bias towards the dollar trading better going forwards on a fairly conventional story of the Fed continuing to normalize policy when the rest of the world is doing relatively little. And that FX markets are quite a conventional story at the moment, and so long as that's the case, then the dollar can continue to grind higher, and that's what we expect, which again will be a relatively unhelpful background for emerging markets.
Adam, any number that you're putting to the dollar or the dollar index going forward?
So we have the dollar index rising by about 3%. So we're into the high 90s by the end of the year. And for euro dollar, that would see a low down, maybe 112 as a sort of benchmark for broad dollars erection. And that view is mostly driven by broad dollars erection rather than anything specific to the euro.
Point well taken, Adam. Really appreciate you joining us and giving us your sense on what really can be expected from the global markets there. So there is the view coming in from Royal Bank of Canada that rupee is not in the forefront of the market action, but being pulled down with what's happening in the global markets, and some more decline really not ruled out. And much would, of course, depend upon what the policy action is within each country that would decide on where the currency would head. As of now, of course, off lows, and that, of course, has been because of the RBI intervention. Tignan Sekhar from Crom Trends as well now joins us to talk more about the currencies and the commodity space. Tignan Sekhar, hi. Your reaction first, because we've seen the futures, as always, fall more than the spot markets. What's your sense on the currency?
Well, I think, in the technical terms, we are sort of hitting a hugely overbought kind of dollar against the rupee market. So we should see some sort of a correction set in soon, at least on a technical basis. But it's just going to be a correction. I don't think it's going to reverse the trend in any way at this point in time. But we are seeing overbought conditions, and that's going to result in probably a retracement towards 70, 80 or thereabouts.
One of the reasons, of course, for the rupee decline also has been the crude oil prices. While, of course, we've seen some correction on that in the last couple of sessions, but still holding on the higher side of the range. How are you watching? Because there have been quite contradicting fundamentals to this one as well.
Absolutely. I think you're absolutely right there, because you have fundamentals which are negative in nature, which ideally should have brought prices down. But the underlying risk sentiment is extremely positive for crude, which is the possibility of Iran sanction, capping the supplies. So that is something which I think the market doesn't want to go overboard on, excessively selling crude, expecting that, fundamentals are negative. I think at this point in time, the market would like to negate fundamentals and just, go in line with sentiment. And the $68 support, is something which is very strong, and that has held and bounced back, which only gives me a feeling that, within a trend, I think when these support levels are held, there is a good chance that the uptrend will resume.
What also is your sense on the metal prices? Because we have seen quite a bit of an action there and quite positive on the other side. A percentage and couple of percentage points up as well for some of those metals. Do you see that sustaining? Would you give it to Rupee, or what really do you think has led to so much buying today?
Well, I think it's bargain buying, to say the least, because there's been quite a while that the demand has been lagging, and with such low prices, clearly we are seeing that kind of short covering coming in, because you have some critical data coming up ahead. So if for any reason I think the dollar starts weakening, which on the technical side it's showing signs that it's reaching some fatigue, and it could sort of correct. Either post the FOMC or even pre-FOMC. So my feeling is I think the metal market is positioning itself, and lots of shorts are being covered mostly, more than buying, I would say.